This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Tuesday morning, as always, from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. And you get a good feeling today, right? I mean, you might get a good feeling every day for other reasons, but there are so many positive cues this morning that the street can latch on to. So it looks like it's not going to be such a bad one.
I think it's a good morning. You know, the overnight cue was good. Weather is lovely here in Mumbai, unlike what we normally see, a little cooler.
Yeah.
Getting out of bed is a bit of an issue, but it looks like a better trading session. So let's hope there's a bit of a bounce back.
But the haze, man. I mean, it's
the haze is a bit of
the pollution.
That's true.
Actually. But anyway, I mean,
but once you're snuggling, it's
can't be.
Till you are.
It's hard to get out of bed, yeah. Especially it was so dark in the morning, right? And you're just like, okay, now I have to do this.
All right. Well, let's hope that things for the market are not hazy. They're a little more clear. They are clearer as compared to when we came into trade yesterday morning. Because yesterday morning, global markets, I mean, the backdrop was that the S&P was down about 1.5% last week, while the market here had held on. That's not the case this morning. So, you know, a positive for global cues after last week's 1.5% S&P 500 drop. When I say positive, what do I mean? Nasdaq was up about 2% plus actually. The S&P was down about 1.5% as well. The trigger seems to be, and we put this quote up to, what Dallas Fed President Logan said over the weekend in his speech. You know, he raised the possibility of the fact that perhaps there is another rate hike, but the market chose to latch on to another portion in the same speech which he gave on Saturday, in which he said that, the Fed's balance sheet tapering, basically the quantitative tightening, that the pace of it, which is about $60 billion right now, that could be, you basically will slow, and eventually sometime down the line, the Fed will once again be a net buyer of bonds, right? Which is QE. And that is what the market chose to latch on to. But that's just one official, but that, the markets chose to pay attention to that rather than what he said about interest rates. Now, in terms of data, one-year inflation expectations, New York Fed one-year inflation expectations have also fallen to about 3% compared to 3.36%. This is especially important because on Thursday, we get this consumer price inflation numbers, CPI numbers in the US, which, I think, at least in this week, is the single largest data point which market will latch on to. Oil prices are sharply down. There is no real news flow. I mean, over the weekend, there were reports of, Saudi Arabia cutting the contracted crude prices for Asia. But, I mean, so maybe sentiment, but that's it. Brent was down 3%. We're at about $76 a barrel at this point in time. Now, just to circle back to where we are at as of yesterday and where things may head from here, we closed yesterday on the Nifty below, just around the 21,500 level. The final adjusted close was 21,513, which is basically the low last week. Now, the 20-day moving average, which we put out yesterday morning also, remains the important support. That number is, the 20-day moving average is 21,425. Which is about 75, actually it's about 100 points away from where we left off yesterday. Only a decisive break of the 20-day moving average can lead to further meaningful downsides. I mean, if that were to happen in the coming days, the downside target to my mind would be somewhere around the 20,900 kind of levels. On the way up, and this is the negation of that downside, on the way up, keep a watch at yesterday's high, which is 21,764. Because if the index trades above that level and then stays above it, closes above it, then you're basically looking at the fact that this was just a one-day kind of a pullback and the market charges right back up. So I think today we are in a bit of a wait-and-watch kind of zone because the GIFT Nifty, I think, is also indicating a higher start. We'll get to that in just a bit. And the Bank Nifty, we closed decisively below the 20-day moving average. On the way down, the Bank Nifty, which has been the weaker of the indices, can test the 40-day exponential moving average, which is 46,659. It's more like a target if the index stays weak and the bounce today is sold into, etc. And again, the negation will come if the Bank Nifty, crosses the high that we saw, which is 48,382 in Bank Nifty's case, and stays above it. So more than anything else, I mean, watch for these levels, the 20-day, and where Nifty especially trades. Do we get closer to it? And of course, on the upside, if the market is able to take out the recent highs, then I think, as I said, you want to trade long, you want to buy the dips. But for today, I would say, maybe a bit of a wait and watch. The GIFT Nifty is indicating 100 points higher kind of a start. So don't jump in straight at the word go, because there's not very much by way of trade there in terms of risk reward. See what markets do and hand over to you in terms of the close, which will give you a better, clearer picture when we come back tomorrow. Sonia.
Oh, absolutely. And there's no doubt about that today the start will be strong. But what happens in the second half of the trading session is, what the market will keenly watch out for, right? We have a lot of positive cues today. The US markets had a really strong run. It was the best day for the Nasdaq in the last 2 months. It was a big rally that we saw for the tech stocks in the second half of the trading session. The Dow was up 216 odd points. Today you have plenty of sectors that will be in focus as well. I'm looking at the auto stocks very keenly because a lot of positive updates coming in over there. Strong Q3 wholesale sales from Tata Motors. Bajaj Auto had that massive buyback, but remember Bajaj Auto also rallied in anticipation of that. So maybe a lot of the news is in. But these are strong sentiment indicators for the sector. Both FIs and DIs bought in the cash markets yesterday. Crude prices have fallen, as Prashant was also pointing out. Now, yesterday the Nifty defended the 21,500 mark, and the Bank Nifty defended the 20 DEMA on close, right? So it's important to see what happens in the second half of the trading session. If the Nifty crosses yesterday's high, then the uptrend perhaps can resume. But if it doesn't, then maybe you could see a sell-off in the second half. So yes, the start will be in the green, but do we build on to that? Time will tell. Another thing I'm watching out for is India's possible inclusion in the bond index. So after JP Morgan, India could be included in the Bloomberg bond index as well. And that could be in a phased manner over the 5-month period. So a lot of the street is watching out for this. In September of 2024, the inclusion could start with about 20%. And there could be, the economists are expecting that there could be an inflow of around $2 to $3 billion over a 5-month period. Remember, earlier JP Morgan had also included India in its bond index. And if this happens, if and when this happens, there could be a lot of buying interest from FIIs, from DIs, from retail. So this is something that the street is watching out for very closely as well. A lot of positive triggers for the bulls to latch onto. Would be a very interesting day of trade.
Well, that's right. Sonia, 2 big triggers actually overnight. Normally, we've been getting up to a little bit tepid overnight cues. This time, it's good. Nasdaq was up 2%. So that could have a positive rub-off on the Nifty IT index. And also, Brent crude prices, as you all mentioned, was down closer around 3% overnight. So both those two are the positive global cues that are coming in there. For our markets, so yes, no two ways about it. The Nifty and the Nifty Bank, the close was extremely weak. When you have the last tick at the low point of the day, that's a bit of an issue. But what's not an issue is there was no big institutional selling. So the bulls will feel good and they'll take some solace from that fact that yes, there was some selling, but maybe the weak hands getting knocked out as well. The 20 DMA, it's very, very crucial, both for the Nifty and the Nifty Bank, but for different reasons. For the Nifty, it becomes crucial on the downside. For the Nifty Bank, it becomes a bit of a resistance on the upside. You get more confident once it gets above that level, the 20 DMA on the upside. What took place yesterday? The Nifty Bank ended lower, but the shorting took place on the Nifty Bank. And we had open interest built up by more than 20%. It appears the FIs were shorting the Nifty Bank a little bit, just trying to collaborate the data. Big surge in open interest. The FI positions as well should come up in the screen. They added close to 18,000 short contracts. That's the highest short contract addition in a single session in close to around 2.5 months. The last time we saw such a big open interest build up in terms of, the FI on the short side was on November 2nd. And just take a look at that. The long positioning has come down drastically. We didn't want that number to go to around 100,000 odd. Well, that's come down to around 59,000. You feel a lot better when the markets are not overly net long, when the FIs don't go overboard on either side. So now we have some shorts in the system, which is not such a bad thing as well, because the short positioning has gone to around 38%. Well, just pull up the options data as well. Yesterday had a weak trading session and call writing returned. So 21,600, 21,700 call. Both of them, between them, they added closer around 1 crore shares odd. So there was aggressive writing being seen on the call side. While on the put side, you had some unwinding of positions. And that's what brought down the PCR from around the 1.1 mark to around 0.84 odd. We normally see it bottom out at around 0.65 to around 0.7. So we have some distance to go from there as well. Another cue that we'll be tracking today will be the Nifty Financial Services Index. That plays out its weekly expiry. So that one will be in focus as well. It ended at the low point of the day yesterday. There's been a fair bit of writing at the 21,500 call for the Nifty Financial Services Index. So the start is in the green. you want to track the Nifty bank, whether it can get to that 20 DMA and if it can build on from there. And then you take it from there. But for the time being, I think we're still in that range of around 21,500 on the downside, 21,850 on the upside. Results will give us further direction, but good to see a green start.
All right, good to see a green start in trade and a big one at that, 125 points in the green. So let's see, how that takes shape and form. But lots of opinion coming through in the next 2.5 hours, so don't go anywhere. First up, Amit Sachdeva of HSBC says that FII flows into Indian equities rebound strongly amidst positive macro context, ending 2023 with $21 billion of inflows. He says strong FII flows are likely to persist on a benign base, benefiting large caps, which lagged in 2023, and offering better risk-reward ratio. He also says financials are favorably placed and the risk-on stance could trigger a rotation into laggards such as IT in 2024.
Sunil Tirumalai of UBS says, outperforming by 11% in 2023, India trades at an 86% premium to emerging markets. He says FIIs and household flows into the market held strong in 2023, supporting these valuations. He believes the optimism is driven by a perception of better geopolitical and macroeconomic positioning. However, sell-side EPS growth estimates and their lowest ever and valuations are close to their peaks. He is underweight India within emerging markets. He says UBS likes infra, industrials and utilities. They're underweight autos, consumer discretionary and cement. They're neutral bank, staples, energy and IT services.
All right, let's also get you some money market cues now for the morning. Abhishek Goenka of IFA Global says 2024 has started off on a good note, with the FPIs pouring in $6.5 billion in equities and $3.2 billion in debt in the first few sessions. He says markets have pared back expectations of rate cuts by the Fed to some extent, and US yields have stabilized. He also says the dollar has made a bit of a comeback. However, Abhishek says despite the recovery in the dollar, the rupee has outperformed, and he expects the rupee to trade in a range of 82.70 to 83.50 over the medium term with a slight appreciation bias.
Well, on bonds, Vishal Goenka of IndiaBonds.com says last evening Bloomberg announced a proposal to include Indian government bonds in global emerging market local currency bond index. He says this news, along with slight easing of liquidity in the banking system, should see bonds rally 3 to 5 basis points today, with a 10-year benchmark bond yield likely to be between 7.13 to 7.18%. He says overall direction of the market will be determined by important upcoming inflation data, with US and India CPI scheduled for later this week.
Well, we've got a lot of stock to track for you. We get to that in just a bit in our special top 10 segment. For the time being, we just run you through the list. We look at Bajaj Auto, Tata Motors, Bandhan Bank, Fino Payments Bank, IRB Infra. All of them will be reacting to positive news flow. Add to the list GMDC, Metropolis, as well as Oro Pharma. All of them reacting to positive news flow. While on the flip side, you have Capacite Infra as well as ONGC could be reacting to negative news flow.